PayPal is up 6.5% today. Yesterday, after hours, the CEO of PayPal was on a Bank of America call, and it went very well. Now, I own PayPal stock. First off, don't ever buy a stock because somebody on the internet has it. I'm here to teach a process. If you love that process, great. Look into PayPal. If it makes sense to you in your situation, do whatever you'd like. But the most important thing here is teaching that process and applying it to all the investments in your life. Back to PayPal, up 6.5%. Guys, the all-time high on PayPal, $310 back in July of 2021. $310. It got as low as $50.25 last October. This is the market. This is what I tell people. You've got to be ready for stocks to fall hard. Even stocks, if I told you back here that PayPal is going to go to $50, you'd be like, you're crazy, Paul. How's it going to go like this? Well, stocks are a voting machine in the short run and a weighing machine in the long run. And hopefully, as the fundamentals of PayPal get better and better, the stock will do well as well, okay? So if you're able to buy the stock for a reasonable price and they're able to build that profit and cash flow up, the stock will eventually follow. Here's what's interesting. In the last 5 years, PayPal is down 40%. Since it went public in July of 2015, it's only up 85%. That's 9 years of 85%. And in that time, you saw it go up over how much? No, maybe more than that. 10x, 8x, and then fall back down. But that's your first indication to go look at these companies. So what was said in the call that was so exciting? This is coming from the CEO. But he said, I am building a world-class team. Okay, listen, as a shareholder, I have one thing to say. Yawn. I don't care what you think, because nobody in the world is telling me, you know what? I'm building a pretty shitty team over here. I'd be a little cautious with your money if I were you. Of course, you're going to say built a world-class team. And I want you to keep in mind, as a PayPal shareholder, I'm not going to be that guy who sits there and says, everything the company says and done is awesome. I'm just going to sit there and say, listen, that first kind of point, shut up. Okay, great. You built a world-class team. World-class teams implement and perform. We'll know in 5 years, we'll know in 3 years if your team is actually world-class. Now, one thing I do like, he said he felt that the company was unfocused, and he's sitting there and getting rid of a lot of, making everything more focus and laser focus. I read a great book years ago called Great at Work. And the main takeaway I took away from that book was do less, but obsess. And it's something that we're doing in our company right now. The ongoing joke is we have 8 or 9 businesses upstairs. We're going to keep those businesses running, but the ones that don't really add much to the bottom line, we're putting somebody else in charge, and we're going to focus on the 3 or 4 businesses that really drive a lot of value. And having everybody focus on their area of expertise and being able to grow their company. I love the fact that PayPal is now saying, listen, we had a lot of stuff going on. We're going to focus on what needs to be focused on. So I do love that. 3, innovation. They really want to ramp up more innovation, spending more money on tech, spending more money on devs to get the innovation going, be in the front lines, because the finance area and the personal money area is a very, very congested area and growing more congested as time goes on. PayPal is a trusted name. They own Venmo. Listen, I had a recent issue. I still have an issue with Venmo with sending larger amounts to family members. Fine. If that's my biggest issue, I'll deal with that. Ironically, Zelle, I'm having the same problem with Zelle. So I think it's an issue overall with banking as it gets more and more into the online banking kind of arena. Focusing more on profitable growth. And more importantly, they're going to compensate managers on profitable growth and those initiatives and succeeding in that area. Guys, show me someone incentives and I will show you what they're going to do. That's what I love. They're going to sit there, and he sat there and said, we're focusing our compensation and more compensation on profitable growth initiatives. If I told you right now I was going to pay you $10 for every page you read in a book, you'd read as many pages as you can, right? Now, if I said to you, that's useless, it's not really doing much for me. But if I said to you, hey, for every task you complete for me that's hanging out there, I'll give you $50, and you could do 10 tasks in a day, of course you'd do it. And I would incentivize you to get that $50 or the $10 of reading. Maybe you'd be like, well, I can read more pages, fine. But the whole point is, if I want certain actions done, I'm going to incentivize you to do those. Now, there's a few more ideas there, but before we get further, this 24/7 channel is an offshoot of our main channel. We're here to provide 3 or 4, 5 videos a week where we react to news, react to the economy, react to different stories. So if you like this sort of thing, do me a favor, subscribe to this channel and say in the comments below what kind of reactions you do like and you'd like us to give you. Now, before we get to point number 5, Mo, why don't you talk about the last quarterly report they had in which this dying company reported a 10% increase in its revenue?
Yeah, so this is April 30th from 2024. Increases kind of all across the board. Like you said, the 10% increase. GAAP earnings per share increased 18%. Non-GAAP increased 27%. Look at these. Total payment volume increased 14%. Payment transactions increased 11%. A lot of increases here for dying.
Now, again,
active accounts decreased 1%.
So that's what I'm going to show next.
Okay,
The active accounts are down. And remember, guys, we don't look at quarter to quarter results and say, buy or don't buy because of this. We look at it as, hey, are we still on the right path? Companies are going to miss. Companies are going to beat. It happens all the time. Even the greatest companies have missed. The point is, are they still on a path and are they still structurally sound to proceed on for your thesis? Mo, go ahead.
And I think it almost goes to like, yeah, you can have all the accounts you want, but if the accounts aren't being used, what does it matter? You want people using the accounts. I think there's a nice balance there, but I don't look at a 1% decrease as bad if I'm seeing an 11% or 14% increase in volume.
So what Mo's talking about here is global user number of PayPal from first quarter 2010 to first quarter 2024. We've had some declines here. Okay, there is decline. I do not like that. I'd rather have growth. But you want to have good growth, like Mo said. And there are a lot of transactions that were growing as well. So here's the value of all payments processed by PayPal from the first quarter of 2014 to 2024. We actually had the worst number at the end of 2022. That's the interesting part. We still have growth happening. We still have this growth happening, and it's year over year. And it's like, okay, no company will be the perfect situation. I get that. But I look at a fall of, at one point it was, 85% on the stock price versus where the business has gone. It causes you to pay attention. So let's get to the next points from the call that happened with the CEO. Focusing on branded checkout. Now, I'm not going to lie to you. Unless I'm ordering something from a place I don't really understand or know, I basically go to Apple Pay. That is an issue for me because I really wish PayPal and Venmo made it much easier for me online on my phone to be able to check out because I'd much rather use PayPal than Apple Pay. But Apple Pay is quite easy, but PayPal is where I go to when it comes to the trusted, where I need to trust them and know they're going to have my back because PayPal does have its consumers' backs. Number 6, I've mentioned a few times, they really want to focus on Venmo. Guys, Venmo is awesome. It truly is an awesome service. I love it. I don't know a single person who uses it who doesn't love it. It's a verb now. Hey, Venmo me. Venmo me. Venmo me. I'm going to Venmo you. In fact, I used to have some people work for me where I required them to get Venmo. And since I required them to get Venmo, it's ironic because now I see their story and there's all these Venmo transactions they're doing. It has worked so well for so many people. Are there issues there? Yes. I don't think their customer service is as good as I'd like it to be. As I'm having these issues with these high transaction amounts, they don't really have an answer for me. That is a problem for me, but I will give them a slide because it is larger transaction amounts where I'm trying to reimburse somebody for some expense or I'm traveling or something like that. Final one, very consistent with one before. They're trying to get rid of brands and other things that aren't really driving growth. Guys, in any world, it's all about good growth. You go look here at the financials of this company. Just take a look at this. 8 billion, 9.3, 10.8, 13.1, 15.5, 17.8, 21.5, 25.4, 27.5, 30 for all of last year, 30.5 for the trailing 12 months. Guys, remember, news follows the stock price. Because all along here, what was I hearing? PayPal's a dying company. Boy, that's a lot of death right there when you see your revenue go up, isn't it? I don't buy into that, but that's what we need. We need the perception to change. Now, the stock's currently up 6%, $67.28. I'm gonna let you in on a secret. I know where the stock's going in the next year. Just kidding. I have no idea. Nobody knows. The point is what we're trying to do is teach that if you like the stock at 67, and let's say hypothetically it goes to 30, but the fundamentals are getting better and better or staying the same or they're not going to the level of what the stock price says, what should you do? If you can, you buy more. I'm not telling you for sure to do that. It's what fits your situation. But that's what I'm trying to teach here. I'm trying to teach that we don't know where stocks are going to go in the long run, in the short run. All I know is if I buy a company and it's around for a long period of time and I pay a good price for the company based on the future cash flow it's going to give me, if the stock price temporarily or in the short run goes down, the hard part is having the stomach to be able to continue to buy that company. It's hard for everybody. That's the hardest thing in investing. Everybody has the brain power to invest, as Peter Lynch says, but not everybody has a stomach. That is what I'm trying to change here. I'm trying to sit there and say, the stomach's hard. It's hard for me now. It was hard for me in the back, but it's much easier for me now. That's why I pick bigger companies that are going to be around for longer periods of time. That's my goal. But again, you can apply all of this process to other investments out there. Now, is it exciting to see that the stock is up, what is that, 35% since October? Sure. Frankly, I don't care though. What I care about is what's it going to look like in 5 or 10 years? Have I sold companies within a year or two of owning them? Absolutely. It's because my thesis changed. Prime example was Carnival Cruise Line. Ironically, I made money on that one, but I sold at the right time, got lucky after looking at it saying, yeah, their debt and shares were much, much greater than I expected them to have. My thesis has changed. I've moved on. So if this makes sense to you, do me a favor. You're interested in this community that can help you become better and the software. In the description below, there's a link. Check it out. Check out our community. Check out our software. Thank you very much for your time.